All right, guys, we're going to get right into it here. We're going to talk about the top three options as of May 13th. Danny, take it away. What do you
All
got?
right, so these are going to be three quick trades that I'd recommend. A few of them are very short term, and then one of them will be longer term. So first and foremost, we're going to do United Airlines. I know nobody likes these airlines. It's people are very pessimistic about them right now, which is why I actually like selling the put option on it as a contrarian play. I think they're going to end up getting some crazy bailout. I mean, they already raised $1 billion and I think it was $1.2 billion about 3 weeks ago. So I expect it to be pretty stable, nowhere near as much of a plummeting stock as the options are implying right now. So with that in mind, I would recommend going out all the way till Friday, or at the most maybe next Friday. And for this Friday, I would probably sell the $20 put. On this particular option, if you get 35 cents for it, it's 1.75% return for 2 days, 2.5 days, since it's Wednesday morning now, which is not terrible. And worst case, you would own it at $20 minus the premium here. So not terrible. I just like it just as a bounce play. And I think UAL will end up being closer to $23 anyways by Friday. And for a little bit more time on it, you could sell the 18s for next week and still get the same premium and just be a little bit further away. So either one, I think you can't go wrong with those two. Secondly, we're going to discuss buying a put option as opposed to selling a put option. And this is betting on downside for the NASDAQ 100, so the largest 100 tech stocks in the US. I think they've ran far too high, far too fast, and they're due to pull back. We're going to go out a little bit further on this one, though, and actually buy for June rather than just a week or two out. For the NASDAQ 100, it's currently trading at 224. I would recommend buying the 210. They aren't cheap. They're $4 each, so it's a $400 obligation minimum per option. But I could see those options easily getting to $6 to $8, and you'd be looking at a 50 to 100% gain as the market starts to pull back here over the next few weeks. It's not likely to end up far below 210, but if it were to happen and we start retesting the lows, those options could theoretically get up to being worth, almost 12 times what they're currently trading at. So lastly, I'm going to recommend call options on VXX. It's an ETF that tracks the next 30 days worth of volatility for the S&P 500 itself. So in March, when things were really dicey, this ETF topped out at just below $80. It's currently at $36 now. So bearing that in mind. So here's a chart of VXX. You'll see that it had quite a little bounce yesterday with that sell-off. I expect it to probably retest at least 50 over the next couple of weeks, if not the next month or two. So with that in mind, I would recommend going out to July and buying the $40 calls. They are not cheap either. They're going for about $5. So you would have a break even of $45 on the actual shares. But if that stock gets to $50 to $60, you're looking at least doubling, if not tripling your money quite quickly on those call options. And you don't have to hold them the whole way through. Just, on the low side, I'd expect them to at least test $6 or $7 prior to expiration.
All right, guys, if you made it this far in the video, please give us a like and a subscribe. It helps us out a lot. Danny, what you got? Any closing comments here? Any wise words of wisdom for the people at home?
Wise words. Yeah, I actually really do recommend those QQQ puts. Even though they're only a month out, I really think they could go up quite a bit of value. And like flip side to the volatility calls as well. I think they'll do very well too.
All right, guys, thanks a bunch, and see you next time.